Hey, this is Mac with PriceActionTradingSystem.com. It's Friday, December the 14th. This will be our chart lesson for today, and really all we had today was a trading range. I believe we had a little channel over here. I found this line off the lows and drug it up, and that kind of helped me find this first trade here. Um, but really when you look back at it, the market opened right down in here, but this was the first leg of, you know, I'd say from early morning till, we spent really the whole day from the open till the close. We really spent most of that time in this, I'd say from maybe 1408 to 1412, so 4 points really. And you can see how that range held pretty much all day. We broke a little lower here, we broke a lower again, and we tried to go lower once again, then we end up closing back in the range. And so I would call this a range day, and really range rules is what I traded all day. And there were quite a few setups, all of them really good setups. You had to take these first three if you were looking at this trend line right here. And there's different reasons to take them, even if not. You might have missed this first trade here, and you actually there was a long right here that you could have taken, and I meant to circle that one in green. Let's just go ahead and circle it. Um, I didn't take this trade. I wasn't here yet. I was a little bit late getting to the office, um, and the trade would have already triggered. Was already up in here before I was ready to start trading, so I missed it. But you could have gone long right there because you got these lows right here and it's a failed break lower. It's definitely looking like a trading range, although we had been trading down. But still, you can't ignore those lows across there. You can see them. And so it's a failed break lower is all it is. So if you saw that set up and you noticed the one tick lower than you turned up, it was worth taking. It's overlap way away from the EMA. So if you took that one, it was okay. It met our rules. I'm not crazy about the setup because you could have easily pulled back and turned down again. So it was better to wait. And then you got this short right here. Again, it's a nice reversal bar. Notice the two matching highs right there. We broke higher and then closed and turned down and closed on the low. I went short right there. Easy scalp, nothing more out of it. Then we came back up and we tested that trend line again and turned down again. Another bearish bar. So a second chance to get short. Again, it was only good for a scalp. And then we come back up and we broke a little bit higher this time and turned down another bearish bar, another chance to go short. And I really thought one of these was going to take off and go lower, and it just didn't happen. But again, all three of these were easy scalps. You didn't get any runners out of them, but they were easy scalps. And then notice we had one leg back, a little correction in here, and then a second leg back. So that's a two-legged move back to test these highs. Another nice little reversal type bar. I went short right there. Easy scalp again, but no runners. And we just couldn't catch any runners today. There was another short right here. Notice that you got a new high right here. You got a one leg back, first entry long, pull back, and then a second entry long. Let me make this a little bigger and you can see it triggered a second entry long and instantly failed and turned into a little doji right there. So I went short right there based on that failed second entry long. I wasn't sure if it was going to work out because it took a little bit of time to get going, and it actually tried to reverse on us right there. We did have some strong lows, so you might have gotten shaken out of this one, but I held on, and luckily it finally broke. And then, of course, I exited right here, and it went a little bit lower. It went a point or two, probably about a point lower there. And but I exited at these lows, figuring that it was going to bounce, and then I'm looking for a long. And when it reversed, nice chance to go long right here. This is just, I mean, it's obvious this is a trading range. This is a new low. Remember, on trading range days, you can just about fade every new high and every new low. And those are the best trades, really. And if you went long right here, it took it a few minutes to kind of work on out, but any runner should have been safe. And there was actually a second entry long right there, but I don't like it because by that time you had too many overlapping bars. You really needed to enter here or not enter. And but if you entered here, your runners were safe, and you could have ridden this to the high. You exit right here, and then you're looking for a short. I probably got a little bit ahead of myself here, but you can't ignore this bar. It's coming off these highs. It's a very bearish. It opens on its high and closes on its low. I went short right there and got hung up in this right here. But again, it's similar to this trade right here. Then suddenly you have a failed second entry long that turns down, another chance to go short, and a second entry, a failed second entry long that turns into a reversal, a nice long trap. You go short right there. And both of these trades would have worked out. You might have gotten shaken out of this one, but as long as your stop was up here, you were okay. And that's where it should have been. And they were good for a scalp, nothing more. And then prices reversed. But now you got another chance, another big reversal bar right off those same highs up there, chance to go short. And guess what? This was probably the best move of the day. And this one moved on fairly quickly. And any runners were safe, so you could have ridden this all the way down. And you got to figure it's going to at least test these lows and maybe make a new low, and it did make a new low. So this was a chance to, if you were short, you probably should have exited right here, but it was definitely a chance to get long again. Remember, it's a trading range day. That's an obvious range. It should be real easy to see. You might have moved this line down here by now, but really, I believe that was right there, was maybe even right there, because you get the most touches all the way across there right there. So that's probably where it ended up being your major low part of the support, right across here at 1409. And so there was actually a long right here too that I didn't talk about, but I don't like that setup. If you saw that and took it, it's probably okay. But this was your next new low, and this was a great setup right here. Again, it took it a little bit, and it might have shaken you out, but that's why you keep your stop below the signal bar, which is right here. And there was a second entry long right here, so you could have entered again right here. I didn't mark it, but either way, it was good for a scalp. If you entered here, you probably got a little more than a scalp out of it, because you could have had your runners if you held a runner. And you got to figure it's coming back up to test this breakout area, and that's where it came to. Then look what happened. You get another huge reversal bar, breakout pullback short. I went short right here, and it was getting a little late in the day, but this was such a good setup. I just couldn't ignore it, and it took it a minute to work out, but it ran down really quick, and then that was it for the day. I didn't mark anything else, and I mean, it's just, there's not much you can say about today other than we really spent the whole day in this range. We spent most of the day in a 4-point range. And just remember, whenever you get a range like this, that if you do break lower, that eventually your goal is about a measured move that's similar to the first range. And there's the width of it. You move that down, and you can see that's exactly where we got to. So, once you drop down, then the range is just down here. You just got a lower range now that's down here like so. And it's still the same kind of setup. So another trader reminded me, if you watch any of my videos, you've seen me tell you before that, how to kind of watch for the range. And but one of the traders, I haven't talked about that lately, but one of the other traders, we hadn't really had many break that, but somebody brought it up, so I thought I would mention it again. And there's your target right there. If you end up going lower, and you see that's exactly pretty much where we went. And even in flat range, even in these flat support and resistance, you still get measured moves, and that's how they work. And you still bounce between them and so forth. So. But otherwise, it's really obvious that's the trading range. And how do you trade trading range? You buy the support, you sell the resistance, and you fade every new high or low. And when I say fade, I mean, like, here's a new low, you go long. If you get a new high, you go short. And you did have a kind of a new high right here, you go short. And here's another new low, you go long. Fading just means take the opposite entry. If you're breaking out lower on a trading range day, you're going to buy. That's fade. That just, if you're fading it, you're buying it. And if you're breaking out high, if you're fading it, you're selling it. So that's all I mean when I say fade every new high or fade every new low on a range day. And you'll generally make some pretty good money. So great. Not a lot of big moves, but every setup, there's no real failed setups. There were actually some other longs in here that you might have taken. You might have taken that long right there. You might have taken that one. They would have worked. This one, that one's not. That one's more questionable right there. And if you took that one, it didn't work. But you know, that's not really a very good setup. But all the rest of them, there's a good reversal. There's a good reversal off the low. And that was pretty much it. So there were a couple other longs in there if you wanted to take them. I didn't like them the way they set up, so I didn't mark them. They were a little more risky, I thought, but they still met the rules and probably should have put them in green, I guess. But there's plenty of other really good entries here to make money on without having to take all of them. And what you got to remember is we traded down into this, so the bias is that if we break out, we're going to break out to the low side. So that's why, you know, you're getting a little more dangerous buying the lows if you don't have a new low in. And that's why I didn't really mark that one, because you don't have a new low. And that's why I didn't mark that one, because you don't have a new low. But you can't look at these as like higher lows. So, you know, there's other reasons that you could still justify taking those two trades. But that's why I didn't mark them, because they were not new lows and we're trading a range and the bias is to the downside. This little breakout here really tricked me here a little bit, and I'll tell you why. Because normally before you'll break lower, even if you're going lower, you'll have a failed break out the top that traps everybody, and we never really got that today. We couldn't get back and make a higher high. Each one of these highs is about the same across here. So you didn't get a trap before you broke lower. You actually had a short trap, and what will usually happen is you'll finally get a breakout the low side. It'll fail, you'll run up, and then you'll get a failed break. It'll go higher and you'll get a failed break out the high side, and then you'll break lower and take off. And it just didn't happen today, and so that's why you don't, you know, even though that's pretty common for that to happen, it didn't break higher and it just finally broke lower again. So the market was just kind of weak is what it is, and you notice this high is higher than this high, and then you had some other, this high is a little lower than that one. And notice how the closes are getting lower, and then finally you got this high. It's equal, but look, the closes are way down here. So that was a sign the market was getting weaker every time it pulled back, and the fact that we went a little lower here. So the sellers were slowly overtaking the buyers, and you see in that they finally broke it lower, and then you got in the lower range here before it bounced again. So. But anyway, I'm going to wrap it up. It's Friday. It's been a long week. Hope you had a good trading week. If you haven't rolled over yet, I rolled over today. I keep getting a lot of questions about rollover, and all I do is when I get the rollover notice, I'll go ahead and open the new chart, and I'll keep an eye on both charts, and I continue to trade the one that has the most volume. And so today, the new contract had more volume than the old contract, where yesterday. Even though yesterday was the first rollover day, the old contract still had all the volume. So I traded the December contract yesterday, but I switched today. And real simple, all I do is open both contracts on rollover day, and I keep them both open. And I don't switch over till the new contract has more volume, or at least an equal amount of volume. And today it had more volume, and there wasn't much volume in the December, so I switched. Real simple. You know, I don't always switch on the first day. It's usually a day or two. Sometimes it'll take it 2 or 3 days, but didn't take it long, just one day, and looked like everybody switched over this time. So hopefully that clarifies that issue for you. Again, I'm going to wrap it up. It's Mac with PriceActionTradingSystem.com, and we'll see you next week.